From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 2nd, 2017. Today we're going to be taking a look at the GBPUSD, the Greater British Pound versus the US dollar, for today's trade analysis. We're starting here on the daily time frame. We're looking at the green shaded area at the very top of the chart near 129.50, 129.20. As we can see, for the past 2 days, we've had a failure to break. We had the close of Friday all the way up into 129.50. Yesterday, we saw a little bit of a gap lower on the weekend, but a significant push lower. We saw this infusion of sell orders, and I often talk about this in the live trade room, that if we're looking to go short, even within an uptrend, we want to see some evidence of selling pressure. We want to see some evidence that there are even sellers interested in this currency pair. Now, I know we have been in an uptrend for quite a long time, so the first thing I would say is buying this currency pair at the top of the uptrend becomes a little bit difficult. Your profit targets are limited right now to at least 129.50 because so far it's been unable to break that resistance high. So what we're looking for is a potential resistance and then reversal point, and what we're looking for is that infusion of sell orders to give us some indication that there's this interest from the sell orders, or at least there are people exiting the buy orders, and that's what we see with that red candle or that bearish candle from yesterday, opening close lower than the close on Friday, and then closing lower than the low of Friday's candle. So with that close and the bearish candle we see there, we see this implication that sellers or sell orders are present here into the green shaded area. So any bumping its head or rally back into that green zone becomes an opportunity for a lower risk and higher potential reward trading scenario. So even if we take Fibonacci, just one simple Fib, we'll go from the low here in the middle of the blue trend line to the current resistance high. We take one simple Fib, and that puts our Fibonacci retracement level, let me get it right on that high, at least the 236, 28.24, the 382, 27.36, and that's one simple way to look at Fib. We could also take Fibonacci all the way down here to the next low, and that puts the 236 now down at 27.30 or 27.63, and then the 382 all the way down here into the mid to low 12600. So we know that there's potential retracement points on the way down. Now, yesterday we talked about this orange shaded area as the significant breaking point. If we're going to see any reversal of this significant uptrend we've seen here for the GBPUSD, we first need to watch for evidence of resistance and reversal, and that's what we're looking for here at the green shaded area. Trying to put an arrow there. We're looking for resistance and reversal. Then we would look for a new lower low to be made, and I think a breakdown of this orange shaded area would give us a significant reversal. So if we're going to find that opportunity to take the short at the highest peak high, the green shaded area is providing that for us today. Take it down to the 4-hour time frame. It doesn't change any of that analysis. We could just see the struggle that the buyers have had breaking through that green shaded area. We see the first push on Friday, opening a little lower, making a new low, coming back up, coming back down to the yellow zone, and this last third try here into the green shaded area. The third try is the last try we're going to look for into that green shaded area, and if it can stay underneath that red trend line, stay underneath the green shaded area, we first off will look for our intraday target back to the yellow shaded area, 28.75, 28.40. If we can get underneath there and underneath that yellow zone, of course, we've already discussed this orange shaded area to be our next potential support level. And a break there, we look for a much stronger and significant push lower down here into the 126s. And all the while, we're at a lower risk opportunity, because if all of those are profit targets, yellow, orange, and blue, what's the risk in this scenario? What's the risk of losing in the scenario? And that is the push back above the green zone. So if it breaks the green zone, we wouldn't want to stay in a short anyway. So that's the risk in the scenario. We know what the risk is. It's smaller right now as it rallies and bumps its head into the green shaded area. So taking a short anywhere right around 129.20, 129.30, I think as long as it stays under this red line and has this third lower high, we're looking for the market to stay underneath there, fall back down to the mid 128s, breaking there, heads back down into the 128 level or even into the 127s for the GBP today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.